Any thoughts on the Russell 2000 versus the S&P 500?
Yes, Russell 2000 looks better than the S&P 500. That's very clear. So again, there's probably more than a couple reasons for that. Number one is the behavioral side. Number one, Russell 2000 has a net short position in futures and options contracts, okay, on the order of about 30,000 contracts, I believe. Yeah, 30,174 net short contracts. Whereas S&P 500, the street is long it. So again, I'm looking at CFTC, non-commercial futures and options positions. In other words, how is the hedge fund community in particular positioned? And they're long 66,000 or north of that S&P index and E-minis. So again, they're long S&P, they're short the Russell, so you want to be long the Russell and short the S&P, okay? If you're just purely going against the crowd, which is a very good way, not all the time, but most of the time to trade macro. So that would be reason number one. Reason number two is that nobody owns a Russell. Because the Russell has sucked wind for a full year. It hasn't done it's done absolutely nothing. I mean, you could have bought all the Russell that you wanted on January the 1st of 2014 at 1208, and you could buy all that you want today at less than 1208. I mean, so at the end of the day, that's, I don't know why I just put 1208 into my system, but that is not going to register anything. The final point is that the Russell 2000 is a play on domestic revenues. Okay, I was just trying to get a live quote on the Russell. Yes, at 1202. You know, so you get all these like, I don't know, I don't even know what these people are anymore. I mean, they're just like Muppets or puppets or talking, I don't know, whatever's. They talk about stocks and how the stocks are doing well, and the only thing that's really done well, I mean, the Russell 2000 is a broad-based index. There's 2,000 stocks in it, and you know, it sucks. I mean, I don't know why you'd say that stocks have done well when the real thing that's done well is the long bond. But again, I'm going off a bit on it. The third real reason to own the Russell instead of the S&P is that the Russell is 80% of its revenues are U.S. domestic, and we like U.S. domestic consumption. We don't like international foreign currency exposure to earnings, and the S&P 500 has a lot of those, certainly relative to the Russell 2000.